You give people a few extra minutes. We're not going to take an hour and a half anyway.
Right. Yes, well. Good evening. Good evening. We're going to give folks just a few more minutes to join us, and then we'll get started. Hopefully all of you have had a good day today, a productive day. Ready to learn about the ERC Recovery Startup Business Credit.
So exciting.
That's right.
If you want to type in the chat box where you're from, just so we can do a general hour, because it looks like a lot of, I mean, we don't have a lot of people on the call, but we have people from all over the state and some places outside the state. So interesting to see where you're from. Well, that's obviously Jennifer, because I can't imagine anybody else from Columbia being here. Even though it's actually Pulaski, but that's okay. All right, where's everybody else from? Type it in the box there, just so we can see where else people are from.
All right, well, y'all are doing that. We'll go ahead and get started. Thank you so much for making time to join us for our virtual workshop this evening. The ERC Recovery Startup Business Credit. Do you qualify for the $100,000 credit? We're going to find out here in just a few minutes. My name is Heather Fay, and I am the Regional Program Director and the Botetourt County Small Business Advisor here based in the Roanoke region of Virginia. We're going to get started with just a few housekeeping things, and then I'll turn everything over to Tom to lead us through our presentation this evening. If you would please keep your microphone muted. We are recording tonight's workshop, and you will receive a copy of that. Later at the end of the program, I'll show you where to log back in to receive that information. And I also encourage you to sign up to get notifications for our YouTube page. We do post other workshops there that we have recorded that you have access to. If you've been with us in a workshop before, one of our colleagues across the Virginia SBDC network, we love engagement, so feel free to use your emoticons in the chat or respond if there's something that's exciting to you or you have questions, and please post up in the chat. That's what that is there for. And I will keep an eye on that. If there's things that I cannot answer, I will defer to Tom during our question and answer at the end of our session. If you want to be on camera tonight, or today is not a camera day, that is totally okay. You're here to learn, and we just appreciate you showing up tonight to work on your business. And one quick last thing is I will post a poll and an evaluation for us. If you will provide feedback at the end of our workshop today, that just helps us gather some more information from you of how we can improve in other topics that are of interest to you going forward. All right. The Roanoke Regional Small Business Development Center is funded in part through a cooperative agreement with the United States Small Business Administration and is supported by America's SBDC, the Virginia SBDC, and the Mason Enterprise Center at George Mason University. Other funding is provided by local administrations, economic development offices, organizations, and businesses that are small business champions in your corner. We want to give a special shout out and thanks to our hosts, the Roanoke Regional Chamber of Commerce, for providing support and space for our work. As you see here on the map, this is the state of Virginia, and we are one of 27 different centers across the state of Virginia. The star that is circled, that is where we are based, and all of the other stars denote different regions where there are SBDCs near you. Our center currently serves 22 different localities, including the Greater Roanoke Valley, Franklin County, and the New River Valley. It is my pleasure to introduce our presenter tonight, Tom Tanner, who is our lead advisor. And I refer to Tom as the Vault. He is just a wealth of knowledge and information, and I always enjoy an opportunity to learn from Tom, and I hope you will too. So I am going to stop sharing my screen and turn things over to Tom. And don't hesitate to reach out via chat if you need anything from us. Thank you.
All right, so let me get to my screen. Oh, I did it again. Picked the wrong screen. All right. Are you looking at the right screen, Miss Heather?
Yes, sir. I see the disclaimer slide is up.
That's where I'm starting at. So,
Fantastic.
welcome everyone. This workshop is scheduled for an hour and a half, but it's not going to take an hour and a half. It's going to be less than an hour. I did a little bit longer in case we had a lot of people with a lot of questions, but we don't have a lot of people, and hopefully I answered most of your questions through the presentation. So, do want to start off just basically say this is based on documents as available as of, should be today, not the 11th, but that's okay, today. As always, before you submit any paperwork, you should always consult your accountant or attorney to make sure everything is kosher with them. All right, so let's get started. So, first thing is you've probably heard about people advertising about the ERC program and everything else, and you probably say, well, I don't qualify. So we're not talking about the regular ERC program tonight, and that's why this is a little bit different and why you should be excited about how easy the process it is. Again, be sure that you've had your accountant or somebody else review the application before we send it. Always remember, you as the business owner is 100% responsible in the event of an audit and any return of the credit along with any interest and penalties. So you want to make sure if you're doing it, it's right. And if you got somebody else to do it, make sure they've done it right, because you are responsible, not the person who's actually providing you the document. All right, let's jump into it. So what are we going to talk about tonight? So we're going to talk about understanding what the recovery startup business credit is, understanding what it takes to be eligible for it, how to calculate the amount of the credit, how to apply for the credit, and deadline. So we're going to actually show you how to fill out the forms. So this is not about, if you qualify, et cetera, and then get somebody else to do the paperwork. We're going to actually show you how to do the paperwork and provide you tools so that you can do it yourself if need be. All right, so first off, so what is the recovery startup business? There's only two things that really require you to be qualified for recovery startup business. One is your business must have started operating after 2/15/2020. And what we mean by operating is it has to be a going concern. In other words, let's just say you set up your LLC on January 1st, 2020, but you didn't really start selling to customers until March 1st, then you qualify, because it's not when you set up your LLC, it's when you actually started doing work for customers and customers started paying you. So that's a critical date. It only applies to W-2 employees. If you have independent contractors, it is not going to apply to them, only to W-2 employees. The other qualification is you had to have W-2 employees in the third or fourth quarter of 2021. It shouldn't say and, but should say if you had W-2 employees in the third quarter or the fourth quarter or third and fourth quarter, then it applies to you. The only other requirement, and it probably doesn't affect anybody here, is during the previous 12 months of the third quarter or previous 12 months of the fourth quarter, you could not have done more than $1 million. Okay. And normally when you're first starting out, you probably didn't do $1 million in the first year. So, but if you did, then you would not qualify. There is no requirement for decreased sales. There's no requirement for full or partial shutdown test or anything like that that falls under the other ERC program. And basically what it's doing, it's counts 70% of all wages up to $10,000. And I'm going to go through the math here in a second to make it a lot more sense. So the maximum a company can claim is $50,000 per quarter, or $100,000 total for the third and fourth quarter combined if you qualify for both quarters. It can also apply to a nonprofit. If you happen to be a nonprofit started off, again, under the same scenario, again, that you have W-2 employees. So gross receipts, again, the gross receipts test only applies if you're going to have $1 million. If you got less than $1 million, the gross receipts test really has no bearing on you. But if you're close to that $1 million, it's basically based on your tax return. So you really just have to look at your tax return, federal tax return, to see whether or not you're over $1 million. If you're close, that's when you got to dig down into it to find out the previous 12 months, because your tax return is going to be for a calendar year, most likely, and you're going to really be looking for a previous 12 months before that. And for nonprofits, the same situation. Typically, you're going to look at your 990 to determine whether or not you had too much gross receipts. All right, so let's get into the meat of the things. So what they're doing is based it on qualified wages. So qualified wages are any wages paid to employees after June 30th, 2021 and before January 1st, 2022. Or for anybody logical, it's from any wages paid between July 1st and December 31st. Okay. So third and fourth quarter of 2021 is what matters. Wages and compensation is anything subject to FICA taxes. So that's going to be wages and compensation, tips, bonuses, anything that falls under that category. In addition to that, healthcare premiums paid by the employee and paid by the employer. Okay, where you pull your reports from, it may just be the employer portion, and that will again make a little bit more sense in a minute when I start going through the math on it. Oops. Sorry about that. Hit the wrong button. All right. If for some reason you have more than one company, you're operating multiple companies, there are some aggregation rules. I'm not going to cover them tonight, but it's something you'll need to talk to somebody or let us know. We'll be glad to help you out with that. All right. So what is the amount of the credit? Because this is really what's important. So it's equal to 70% of the qualified wages paid to eligible employees during these covered periods. We keep coming back to it's the third and or fourth quarter of 2021. So it's 70% of the qualified wages that we just talked about, which is W-2 wages, qualified healthcare wages, etc. So this is the key. The maximum amount of qualified wages that you can claim credit for is $10,000 maximum wages, or being 70%, $7,000 per employee per quarter. Okay, so again, these are $10,000 maximum wages, which would equal to 70% or $7,000. Again, I'm going to go through the math here and some examples, so this will make a lot more sense. All right, so here's a little chart I put together to kind of show you what we're talking about. So let's just look at this employer. We had this employer in the third quarter has 3 employees, employee 1, 2, and 3. So under employee 1, wages paid in quarter 3 to employee 1 was $15,000. Okay, so there's a limit of $10,000 per employee per quarter. So this particular wages for this employee is going to be limited to $10,000 because that's the maximum qualified. So employee 2 had exactly $10,000. So we can count the entire $10,000. Employee 3 had $8,000 of wages. So we can only count $8,000 as qualified wages. We can't count any more than that because that's all they had. So now if we look at the credit, we're basically just taking employee 1, we're multiplying 10,000 by 70%, which is 7,000. We're taking employee 2, again, taking $10,000 and multiplying it by 70%, which is 7. The employee 3, which was $8,000 times 70 gives you $5,600. So if we add it all up, just in quarter 3, this business can recoup $19,600 on the wages earned. Okay, so this is a heck of a credit that's available to you. I'm not going to go through quarter 4, but it works basically the same way. All right. A couple things to be aware of. The payroll used for ERC credits are non-deductible in the federal tax return. And what that basically means is that when you filed your tax return for your business, you had deducted those wages on your tax return initially. Okay. So if the IRS comes back and says, well, we're going to give you this money back, what happens is you're going to have to reclaim that deduction that you took off on your tax return, which is going to require you to file an amended tax return for your business for 2021. Okay. So if you're a sole proprietor, you're filing a Schedule C as part of your 1040 tax return. So you would have to file an amended tax return, amended your Schedule C to add back in the amount of credit that you received, and which in turn will mean you're going to have to pay additional income tax personally on the money that you got back for credit. So if you got $10,000 back and you're in a 10% tax bracket, you're going to have to pay $1,000 in additional income tax. So if your tax is a partnership or an S corporation, you're going to have to amend your corporate tax return, either the 1120S, which is the S corporation, or the 1065, which is the partnership. You're going to have to amend those tax returns. And what happens is, since both a partnership and an S corporation are pass-through entities, which means the profit from those businesses are reported on your personal tax return through what we call a K-1, you're going to have to, in turn, not only file amended tax returns for your partnership and S corporation, but also for your personal. And again, you're going to have to pay additional taxes based on the amount of credit that you received back. And I've had some people go, oh man, that means I got to pay all these taxes back. No, it just means this, again, if you receive $10,000, and even if you're in a 22% tax bracket, you might have to pay back $3,000 if you count the state and federal tax that you're going to have to pay back. You're still way ahead than when you were before you filed it. Also, the statute of limitations for 941 audits is 5 years. So you want to make sure that you're keeping all paperwork associated with it, payroll journals, your math formula, your 941X, all your forms that you need, all the proof that you need to make sure this stuff is kept somewhere, because the IRS can come back for 5 years, which basically means they have a long time to come back to you. Okay, basically April 15th of 2027. So keep all documents somewhere safe for that. All right, how about wages paid to owners and relatives? All right, so I'm going to give you a couple of things. One is a complicated reason from the IRS. So the IRS came out with this really complicated formula, basically, that said any wages paid to any child, grandchild, brother, sister, stepbrother, stepsister, father, basically everybody who's somewhat related to you, and related to a majority owner of the company, those wages are not considered qualified wages. Okay. If the owner of the company is 50% or less, then those are considered qualified wages. Again, if the owner of the company is more than 50%, then any of these people listed here are not going to be considered qualified wages. If the owner is 50% or less, then these are considered qualified wages. All right, how about for the owner? Same thing applies. If the owner controls 50% or less, so a lot of times if you have two owners, it's a 50-50 partnership. So if it's 50% or less, then the wages for the owner and spouse are qualified. If it's more than 50%, neither the owner or the spouse are going to be considered qualified wages. All right. There is one exception to this rule, which makes it even more confusing, is that if a more than 50% owner has no relatives as described above, then a majority owner and spouse may be eligible as qualified wages. And what we mean is if you have a 51 or if more than 50% owner and they don't have any child, grandchild, brother, sisters, stepchild, brother-in-law, sister-in-law, brother-in-law, anybody up there, then you could qualify. Which basically means you have no living relatives on this earth, then you could qualify for it. Okay. All right. I'm not going to go through these examples to show you because hopefully that was pretty straightforward, but I do provide you 4 examples and we're going to provide you this presentation, but I don't want to take time going over these examples. You can just read them to kind of get a feel of it. All right. We want to jump into why we're here is how and when to claim the credit. So how do you claim the credit? So you must file a 941X, which is basically an amended 941 tax return. And if you have employees, which you should, because if you don't have employees, you probably shouldn't be here, but we assume you have employees, which means you do file a 941 now for your quarterly federal tax return. Okay. So all you're doing is you're filing an amended return. Okay, and it's got to be done within 3 years of the filing tax date. So basically, you have until April 15th of 2025 to apply for this credit. I wouldn't wait. We got this thing as soon as you know how to do it, move forward and get this filed because the quicker you file, the quicker you're going to get your refund. But I'm just saying, time is important, but you do have plenty of time to still do it. So an amended tax return or 941X can only be manually filed, which means you have to fill out the form and manually mail it in to the IRS. Okay. And I highly recommend that when you fill this in and mail it in, that you use some sort of service like priority mail that you can document when you sent it, document the fact that they did receive it, and make sure you keep that documentation with the rest of your paperwork. Because if you ever need to check on it, then you can say, well, you received it on this particular date, and they can say, well, we never received it. Do you have any proof that we got it? And if you can't, then they're just going to make you send it again, even if it's sitting there. Expect a credit to take anywhere between 3 and 6 months to receive your check back from them. It can take longer, can take less, but right now they're saying anywhere between 3 and 6 months. And so it's not something that you stick it in the mail and 2 weeks later you're going to have your check. It's going to take some time for it to come in. All right, so now we're going to jump into actually how to complete this form so that you can do it yourself. You don't need to be paying somebody 25% of your refund to get it done, or pay anybody $1,000 to get it done, or whatever. All right. So first of all of you, if you're using a payroll service, and I assume if you have payroll, you're probably using some sort of payroll service. Either you're outsourcing it, you're using QuickBooks payroll, you're using Gusto, you're using some sort of computerized payroll system. If you're not, you can still get this information, but it's just probably a little bit more difficult. But what you're looking for is to create a report that's called a payroll summary. And basically what you're doing is you're running a report that shows it by employee, your gross pay, and all your deductions, et cetera, et cetera. And what we're looking for is the numbers of gross pay. We're not looking at net pay, we're looking at gross pay. So here's an example, employee one, their adjusted gross pay is $10,431.61. Employee two is $7,214.75. Employee three is $78,066, et cetera, et cetera. And this is for October through December. So this is for fourth quarter. So the first thing you do is find this payroll summary by employee. Okay. Again, this should be a form you should be able to easily find in your system or ask from your payroll company. All right. So the next thing we're going to do is I've created a spreadsheet, which an Excel spreadsheet, which you can open in Excel, you can open in Google Sheets or whatever. And I will send this out after meeting, along with presentation, along with the video of the presentation, and along with the forms that we use to figure it out, and copies of the forms we use to show you how it figures out, et cetera, et cetera. So we're going to provide you all the tools. So anyway, I created a spreadsheet. So what we're doing here is, you see, we have employee one, and we're just looking at, we're going to kind of go back and forth a little bit. You'll see employee one, if we go back up here, you'll see October through December, employee one, their gross pay was $10,431.61. So if we go in here in wages paid, we put $10,431.61. If we go back here to look at employee two, $72,414.75, and we plug that in, et cetera, for employee three and employee four. Okay. Now, 401k contributions by employee, under most circumstances, if you're getting the total gross pay, it's going to have everything in there. So you're not going to have an additional gross pay for 401k. You're also not going to have employee contributions to the healthcare, because it's going to be part of your gross pay. Okay, unless for some reason your payroll program does a little different. But typically your gross pay is going to include everything, and then you're going to subtract out healthcare, et cetera, but it would not include the healthcare wages paid by the employer. So let's just take employee one. So the wages paid for them was $10,431.61. There was no 401 contributions that weren't included. So the qualified wages excluding healthcare is $10,000, because remember, it's limited to $10,000. So they cannot claim more than $10,000 per employee per quarter. So now we now look at any healthcare premiums, which are zero. So now qualified wages, including healthcare, is still $10,000. So if we do that for each employee, it's going to come out and list the wages paid. We're going to list the qualified wages, excluding healthcare. We add up the 10,000, the 7214, the 7807, the 8790, and that's going to give us the 33,813.36, which is the qualified wages for that particular quarter, or in this case here, the fourth quarter. Now, if we go down to the bottom and we look at the credit is 70%, and of course the spreadsheet's going to do all this for you. It's going to show you the total credit for all employees is $23,669.35, which is the amount of money that you're going to get from the IRS. All right, so the spreadsheet has kind of done the work for you. Now we're going to go into the actual chart or the forms to show you what happens next. So first of all, I want to pull up a 941 just so you're familiar with it. So this is the 941 that you filed in October, November, and December of 2021. So we just pulled it back up to show where the numbers are at. Okay, and this is just the bottom portion of that. So now what we need is what we call worksheet 4, which is the adjusted employee retention credit for qualified wages paid after June 30th, 2021 and before January 1st, 2022. I will be including this form in the packet that we're sending back out to you. So the very first thing we're going to do is you'll notice here is, let me put a thing on it here, is you'll see that 34,244.97 is the 1B column, and that's taken directly from your 941 that you sent in 2021, line 5C. Okay, it even tells you on here, it'll say Medicare wages 941 part 1 line 5C. Okay, so when you carry that over here, you're now there. So the next thing you're going to do is go, okay, multiplied line 1B by 1.45%. Okay, basic math comes out and gives you 496.55. All right, so now only thing else on this form, is you're going to carry down line 1C all the way down to 1G, which is 496.55. So far, pretty simple, right? It doesn't get much more difficult. And I give you all the secrets. All right, this looks crazy and complicated, but it's actually very simple. All right, so you go back to my spreadsheet I created, and you came up with this 33,813.36 that's in that total qualified wages excluding healthcare, which is the number we're dealing with. We just move that number over to line 2A. Okay. We don't have any healthcare premiums, but if we did, we would move those to line 2B. And then we would just add line 2A plus 2B gives you line 2C. Okay, in this case here, it's exactly the same number, 33,813.36 flows to 33,813.36. Now we're going to take line 2D. It's going to ask you to do all this stuff about multiplying by this and this, but we've already done that for you. So the total credit for all employees is 23,669.35, which it just carries over to 2D. I will tell you that it can't be more than 50,000 per quarter. So if it's more than 50,000 in this number here, you're going to have to replace this with just 50,000. All right. You're back to 496.55, which was on the first page of line 1C, which I also showed you right here as part of this document. We're just going to transpose that over to here. Okay, so now 2H is basically saying just transpose it from above to 290, so it's 496.55. You're now going to basically subtract 2D from 2H, and that gives you 23,172.80. Okay, so those numbers just flow together. That's not on the spreadsheet. This number is the last number on the spreadsheet. All right, so now we're going to go down to the actual form. This is the 941X form that you're actually going to complete. First thing you do is make sure you check the little box that says 941. The next thing you do is make sure that you check the number 4 for October, November, December. If you're working on the fourth quarter, if you're working on the third quarter, check the third box, July, August, September. Okay. Enter the calendar year. This is going to be 2021 because that's the only year that the recovery startup business complied to it. Enter the date you discovered errors, and you can really just put the date that you're completing the form. That's all you have to put there. All right, now we just have a couple of boxes we have to check. So under part 1, you're going to check box 2. Okay. Under part 2, you're going to check box 3. And under box 5, you're going to check box D. Okay. So far, pretty simple, huh? All right. The next thing you're going to do is basically look at what it tells you on this sheet here. So what we're looking at, it says worksheet 4, line 2H. So we're going to go back to worksheet 4, line 2H, and you'll see right here, it'll say 496.55. Okay. So then all we're doing is in this box, we put in 496.55. Second box, you put 0. In the third box, you put 496.55. Most important is this last column, because this is the amount of refund you're getting. So you're just going to carry over 496.55 to the last column, but make sure you put a negative number, because if you put a positive number, that means you owe the IRS money. If you put a negative number, that means they're going to send you money. So that little dash means a whole lot. All right, so now we're going to go to the next page, almost on the home stretch here. At the top of each page, make sure you list the name of your business, your employee identification number. You also want to make sure you're listing the correct quarter that you're filing for, and also the correct year. Okay. All right. So let's go back to, now we're at line 23, and all we're doing is copying down from the previous page, minus 496.55. You can see it says combined lines 7 through 21, which is basically where we just were. So carry that number there. Again, don't forget that negative number. Okay. So the next thing we're going to look for is worksheet 4, line 2I. So now we're going to go back to worksheet 4 and look for line 2I. In line 2I, it's here at the bottom. So it's 23,172.80. So now we're going to go back here, enter this number, 23,172.80. Column 2 is 0 because this is what the original reported amount, which was 0. And make sure you put 0 in all these other columns. So you want to make sure everything's got zeros besides the ones that you're filling in. So now the difference is at column 3, which is 23,172.80. And again, make sure you put a negative there, 23,172.80. You add those two up, and that's going to give you minus 23,669.35, which if we go back to this sheet here, you'll see it says 23,669.35, which is the same thing that's on our spreadsheet. All right. So simple so far. We're almost home. Last thing you enter is qualified wages for the employee retention credit. Again, we're looking at worksheet 4, line 2A. So we're going to go back to worksheet 4, line 2A. And you'll see 33,813.36, which comes off this spreadsheet. So now we're going to go back to this form and put in 33,813.36, carry it over to 33,813.36. That is not a negative number, so you just leave it as it is. The last thing you've got to check, and do not for any reason forget this little button here, it says, check here if you're eligible for the employee retention credit in the third or fourth quarter of 2021, solely because your business is a recovery startup. Now you check that box right there. Okay. So now you go to the last page. Again, make sure you put your name at the top, the employee identification number, the quarter, and the correcting calendar year. And just make sure, again, make sure you put all zeros in there. And then on the last page, again, make sure you put your name, employer identification number, correct quarter, correct calendar year. And then right in box 43, very, very important, claiming the recovery startup business credit under the employee retention credit, tax credit, which was never claimed, okay, or something like that. It just basically you're making sure they know what you're doing. And the last thing is you sign your name, you print your name, you put in here your title. If you're an LLC, it'll be a member. If you're a corporation, it could be an officer, director, or whatever. The date you're filing this and your phone number. Okay. The bottom section is the pay preparer that would not apply to you at all. So just leave that blank. All right. So where do you get the form? So one is I'll send you a copy of it. Two is that you can also go to the IRS website and just look for a 941X. Another choice you have is use a third-party processor to help fill out the form. An example is these two here. One I use a lot is taxbandits.com. You'd set up an account and then you would pick the 941X for 2021. It would automatically help you fill out all the form and it would save it for you. And all you have to do is you still have to print it off and mail it. And there is a fee. I think it's like $2 or something. It's not required. You can just use the blank 941X from the IRS, but using these third-party processors properly fill out the zeros and make sure the math works and everything else. So your choice of which way you want to go on that. All right. If you're in any of these states, which I'm thinking, I guess most of you are in Virginia, this would go to the Department of the Treasury in Cincinnati, Ohio. Just remember to send this by some sort of tracking, certified receipt, priority mail, some way. Do not cheat on this. I mean, you may be getting $50,000 or $100,000 back. Don't try to save $6 by shipping it with a 52-cent stamp. Okay. Make sure you're somehow tracking this. If you're in a state other than these, then you're going to have to go look up and see where the proper address is. All right. I told you it wasn't going to take long. You can stop the recording now if you'd like. That's how simple this program is. I think it's a great